Hello, welcome to another episode of Charles Reviews. Today we're going to be discussing Bitcoin versus altcoins and how diversification in cryptocurrencies doesn't work. Make sure you subscribe to my channel and hit the notification button. Let's get into it. So I think we can begin today's episode by looking at what Peter Brand, the veteran trader, said a few days ago regarding Bitcoin versus other altcoins. And he was kind of bearish when it came to altcoins in general and bullish on Bitcoin long term. Brand states that many altcoins benefited from the last bull run in BTC. Crypto maniacs expect alts to do the same thing again. They may very well be disappointed. Look at the 2000 dot-com bubble, he says. Following 2000 to 2001 tech collapse, dot-coms with real value exploded. The alt dot-coms went bankrupt. And in the recent interview on CNBC, we have Max Keiser, who's obviously a huge advocate of Bitcoin, and he stated that the dominance index is currently at 60% and it's going back to 80% or 90%. Because that's the logical place for everyone who wants to be in crypto. But the short answer is, in my view, the altcoin phenomenon is finished. And in an article by Cointelegraph titled Crypto Bubbles, Why Traders Believe Altcoins Are Overpriced, we actually have a discussion with Josh Rager, a trader who told Cointelegraph that even with Bitcoin's current rise, there will remain other cryptocurrencies that perform well as a result of offering value propositions not covered by Bitcoin. So, of course, when somebody says something online, there's always going to be a counterpoint. There's always going to be a counter argument. Josh makes a valid opinion, a valid statement when he says that Bitcoin dominance of the total market cap is at 65%. And as long as this continues to move up, then the rest of the market will likely stay stagnant in price. And this actually follows on with a trader on the Brave New Coin podcast, Mr. Josh Olszewicz. So Mr. Olszewicz actually states that alt seasons tend to follow a similar pattern. He says that Bitcoin makes a run, altcoins follow in USD terms but are unable to maintain the pace in BTC terms, and then people take profit in Bitcoin and those funds rotate into higher cap stuff, Ethereum, Litecoin, Monero, etc., and then eventually into the lower cap stuff as Bitcoin goes sideways and consolidates. And this is actually a really important point that Josh Olszewicz touches on, because he goes on to state that thin order books and a lack of appropriate exchanges make the purchasing of small cap coins very difficult for big ticket buyers. Recent data suggests that institutional investors are much more likely to invest in Bitcoin, and they've had a profitable 2019 as a result. And I think this actually touches on a very important truth. You can't have whales, you can't have institutional buyers and big spenders just come in the market and start buying up altcoins. It doesn't work like that because you have thin order books, you have liquidity issues. If there's not enough buyers and sellers, then the whale's just going to be pushing up the price and he's not going to be able to accumulate those coins because he's pushing up the price precisely because the order books are thin. And that's why you have institutional buyers buying Bitcoin and not other altcoins. And now I think we can really move on to the second topic of the video. And it's quite complex. It took me a while to really get my head around it, but I'll do my best to try and explain it to you. So I saw an article last week by Jimmy Song, and Jimmy Song was basically saying cryptocurrency diversification doesn't work. It makes little sense because why would you bother investing in altcoins when all altcoins follow the price of Bitcoin? And it got me thinking about diversification and really how diversification just leads to mismanagement with your portfolio in cryptocurrency. And I was recently reading a book by Peter Thiel's 0 to 1. And Thiel actually discusses something called a power law. And I think this is fundamental if you want to make money in the crypto markets. Now, Thiel was obviously talking about power laws in regards to venture capital and traditional stocks and assets, but I still think you can apply it to crypto assets, cryptocurrencies. So when it comes to diversification, we're usually thinking in bell curves or nominal distributions. So a nominal distribution or normal distribution is something like IQ. At one end of the scale, you have a bunch of people who aren't that smart, and at another end of the scale, you have a bunch of people who are very smart, and everyone else, all the people who are average, are in the middle. So that's why it's called a bell curve. It's the same with human height. All the short people are on one end, all the really tall people are on the other end, and all the people of average stature, average height are in the middle on the bell curve. Now, a power law is very, very different, and we have a quote here by Thiel, who actually states that whatever Einstein did or didn't say, the power law, so named because exponential equations describe severely unequal distributions, and this is what it's all about. It's all about unequal distributions, unequal profit, is the law of the universe. Thiel goes on to state that this law of the universe defines our surroundings so completely that we usually don't even see it. So what Peter Thiel is really trying to say is that the biggest secret in venture capital investing is that your fund, your portfolio, must equal or outperform the entire rest of the fund combined. In other words, if you're going to invest in something, just invest in 3 or 4 different assets and bulk out the rest of your portfolio with Bitcoin. As long as you do your research, as long as you do your analysis, you're going to probably gain in the long term because you've done a deep dive, you've done deep research, deep knowledge on those coins, on those tokens. You and I both know it's not possible to do a code review, a white paper review, a team review, and look at the marketing and all the different things that make up the whole agenda of a cryptocurrency asset for, say, 100 or 200 or 300 different coins. I mean, there's thousands of coins out there. You just haven't got the time of day to do that. It's far wiser just to focus your attention on those select few coins that have the potential to make a J curve in your portfolio. So your portfolio goes all the way up, as opposed to just staying like a random distribution, a bell curve. That's something you don't want. And this actually touches on something that Tim Ferriss said in one of his books. It was either the 4-hour work week or the 4-hour body. I can't remember which. But Tim Ferriss makes an argument for why less is more. And he uses an acronym to describe this called MED, which stands for minimum effective dose. And he's talking in his book in regards to basically saving time so you can gain mass, so you can gain more muscle on your body. And he said that instead of doing, say, 10 sets of 20 kilograms on each arm, where you do, say, 20 repetitions on each arm, he's saying that's a lot of work, and basically you'll just be using up more energy and it's just very inefficient. Instead of doing that, you just need to do 2 or 3 sets on a very heavy weight, and then you'll get, incremental gains in a far shorter space of time. It ties in very well with the power law, because you haven't got the time in your day to, research, 80, 90, 100 different cryptocurrencies. You just haven't. You can't read all the white papers. You can't look at all the GitHubs, all the code, analyze the teams. And if you did do that, you wouldn't be doing it in a sufficient way. So you really want to be doing it in an effective way, and in a way that Tim Ferriss kind of advocates that one should weightlift or work out, because it's completely irrational to spend X amount of time for so much gain when you can use far less time for the same gain or more gain. So thank you so much for taking the time out of your day to watch my video. I really do appreciate it. Make sure you subscribe to the channel, hit the notification button, hit the like button, make sure you comment down below, and also you can join me in my Telegram group. I'll put the link down below in the description. Thank you for watching. I will see you in the next episode.